Yes, let's get in Tapan Doshi, research analyst at CA-Tapan.in in the conversation as well. Thanks so much, Tapan, for joining in. And let's start off with the ones which are likely going to be the big movers of the morning, right? And let's start off with a positive, let's say. Syrma SGS, for a business which now consistently has delivered, even when the other EMS companies at times have faltered. What do you make of the quarter gone by, and would an EBITDA estimate uptick mean that the stock could actually do well despite the valuations?
Well, good morning, Neeraj. Thanks for calling. Of course, I'm quite positive on Syrma SGS. It is one of my top pick over the time. Now, because if you see even the execution is good for this company, and among the EMS sector, I think this is the stock is doing very well. If you see the electronic manufacturing is scaling up, again, export opportunities for this company is quite good. Again, new capacity ramp up is happening. So we have to see how they are going to execute more. The only thing is, somewhere, working capital intensity is there. So there, we feel that it will have a margin pressure, but somehow if you see the current result, the EBITDA margin has improved, so that's a positive thing. Again, it's a diversified PMS portfolio, so that is helping actually Syrma SGS to go up, and again beneficiary of PLI scheme. And if you see, the government is extending PLI scheme for the electronics manufacturing and all that, so all these are positive. Yes, I can say the valuation is quite on a premium side, but this is the stock which will deserve a higher premium. But yes, at this level, I'll not say to go and just buy, wait for the dip, but I think for the long term, I think this is the good stock to hold.
Tapan, morning, Alex here. So I'm also wondering about MTAR Tech, because the stock has been, as Neeraj pointed out, on another orbit, right? It's gained quite considerably, but in trade yesterday it saw a cool off, quite a sharp one at that. It ended at lower circuit. The numbers look absolutely fabulous. What would you do if you're holding this, and what would you do if you're not?
Well, it gone up too fast, and again, if you see the P ratio also is around 116, so it's still expensive, but its results were quite good. If you see PAT 42% year-on-year growth, EBITDA margin expanded, good strong export execution and all that. Again, the defense order is going to come for this company. Also, clean, green and opportunity is there for this company. Nuclear business also scaling up. The only thing is, we have to see the customer concentration is there for the company. So if one of the customer goes, then it will have a direct impact on the margins. Valuation, of course, expensive. Even though the stock has come down a lot, it is expensive, and there are some projects delay possible. But because it in a precision engineering, it's a leader and had the order pipeline, I think one can wait, don't jump. Maybe 10-15% down from here, maybe around 90p, around that someone can start getting, because this stock will deserve a premium because it's been doing well over the time.
Tapan, Syngene, Redington, any of them that you're tracking and you've seen a view on any of them?
Well, Syngene has given a very bad result. It's been underperforming for a long time. I think last 3 quarters was not at all good. If you see there, the main problem is one of that high capex. Again, some of the US regulatory risks are there, and price pressure is there. That is actually impacting the margin. Again, the forex impact is there, currency fluctuation is there. But if you see, they are expanding their manufacturing capacity, and if you see, their long-term contract wins are coming for the company. Again, backed by the Biocon Group, the global investor. If you see, global innovator partnership is also increased for the company. See, a lot of prospects are there, and we know this segment is doing quite well. At least the CRDM demand is improving. So my take is wait for one more quarter. Don't get into at this level, because I think we have to see when again the sales and profitability goes up. So I will not enter at this level currently.
Tapan, I would like for you to, I don't know if you track Waaree or no, but if you do, this miss that has happened in, if you remove the one-offs, then probably an even larger miss relative to what was estimated and reported in Q1, versus the management guiding, and the guidance to be watched out for, but the guidance reaffirmation that they've consistently given. How do you view Waaree in light of the fact that it has fallen 20-23%, but it is delivered a weak quarter?
Well, Neeraj, honestly, I'm not positive on Waaree. The sheer reason is simple, that margin pressure will be there for all the solar companies. It's not only for Waaree, for most of the solar companies, unless they are in a niche solar manufacturing. Otherwise, if you are diversifying like the Waaree is doing, a whole integrated player, then there will be a miss. If you see the US policy uncertainty is there, again, they have their own unit there. Input cost volatility, again, execution risk will be there. They have a very high capex, and again, that will have an impact on working capital, and also the interest may go up. So rising competition is there. Of course, we know the oversupply from China side. Again, in India also it is almost oversupply across the world. So that is the pressure which most of the solar companies will have. Even though if you can see the revenue is going up, the profitability is not going up, and that is what market will take sense of. Even though they are beneficial of PLI scheme and all that, but I think the margin, if it comes down, then the de-rating may happen. That is what I feel, and that's why I stay away from Waaree currently.
I just want to extend that question very quickly, Tapan, if you have a view. Waaree, I think the question in the worry is about overcapacity, right? Is that something that you would extend to the other players in the space?
100%. No, that's because it will impact everyone. If Waaree is getting impacted, one of the premium player, I think all the small players will be impacted. Again, if you see the valuation of most of the solar companies gone up a lot earlier. Now, which solar companies? Of course, ACME is one of the exception, but they are again in a different segment also. But other than pure solar company manufacturer will have an impact. If you see overcapacity, like India, I think it is a demand of 160 gigawatt, and the supply is almost 250 gigawatt. In China, it is maybe 250 gigawatt demand. Supply is almost 500 gigawatt. So what it shows that supply is there, and China, we know how aggressive they are. Now these companies have to expand to other countries if they really want to increase their sales. Now that China will also go. So that is where impact will be. And for Waaree, you see they have a US unit. Now we know that it is what type of Trump policy is there. So across, I feel all the players will have an impact, and that is what will happen in next 1 year. That de-rating from the point of view margin may remain down, and that is where de-rating may happen. That is what I feel.
Tapan, are you excited about Asian Paints? And what is it telling you about the whole consumption story question that is going on right now?
No, not as such, because I think it's not a compounding machine. Honestly, when we are going for a long term, we need a 20-25% growth if possible over the time. I think there's a lot of competition in paints industry. Once the Birla Opus and then JSW Paints, if you see the margin of most of the paint companies in last 2-3 years are going down only. Of course, the stock has gone down a lot, so some recovery will come. But when we are talking about whether one can hold for 3 years, 4 years, I don't think that will give that type of gain. If you see the overall raw material volatility will be there. Again, competition is too much. Again, Grasim is becoming very much aggressive. Of course, they have not lost the share Asian Paints, but market is knowing this, and that's why they will give less premium to Asian Paints to earlier. And rural demand may improve over the time, but it will take some time. So my take is, I think other sector may give you a better return compared to paint industry.
Quick view on Colgate, Tapan?
No, it will be avoid from my side. No, the problem is the volume growth. From last 3 years, the volume growth is almost 5%. Profit growth maybe 4%. And it's not able to diversify their products. Again, competition in this segment is increasing. Raw material cost risk is there. Again, the valuation still looks premium only. And if you see the other companies are able to diversify their products. Now, in FMCG, if you really want to go to any of the stock, at least you should have a double-digit volume growth. Then only it will justify the premium valuation which most of the FMCG companies are getting. And I think if someone want to, I think Marico is one of the stock, you can see double-digit growth, you can say. So you have to be very, very choosy in FMCG if you want to go. Colgate, I think, no, it may underperform.